everyone, and welcome to this latest edition of the Sharesify podcast. I'm joined, as usual, by James and Ian. Hello, gents.
Thanks, Steve.
Just to kick things off, I'd like to flag up to listeners that on June the 24th, we've got our first ever webinar. So if you've got questions about Japan, about Europe, then you should definitely plug in. We've got the AVI Japan Opportunities Trust presenting everything about Japan. Very interesting topic at the moment. Sanyo is in their portfolio. I remember going back, when I was a kid, they used to make videos and alarm clock radios and stuff. I don't know what they do these days, so this will be the perfect opportunity to find out. And of course, we'll be also joined by the JPM Morgan European Opportunities Trust. So some really good insight for listeners there. It's free, it's online, 6 p.m, 24th of June. So join us for that. After that, what's been going on this week, chaps? And blimey, it's been a fairly busy week, isn't it? Quite a lot of news going around, SpaceX and markets and all sorts going on. Ian, what are you seeing?
Well, Steve, what's really fascinating for me, must have, to I actually saw a tweet earlier today, is how do I avoid owning SpaceX? Now, this is interesting because what did we say on Wednesday? We were talking about the Dow Jones indices and all the other indices, including SpaceX, straight away, which is really unusual. Well, there's been a bit of a change of heart here. And now it turns out S&P Dow Jones, the index compiler, is saying that none of these IPOs are going to go in for a year, which is weird because, I know at the valuation that we're talking of 1.75 trillion, SpaceX is going to be in the top 10 of the S&P 500. Same with Anthropic, same with the AI. And yet none of these companies are going to be included apparently in the index for 12 months.
It just makes me wonder. I wonder if S&P are seeing this as just a bit of a complete shake-up of the territory. So they've had a system in place. They were talking about changing it, but simply because of the scale of SpaceX. I mean, we've had nothing ever before of this scale listing in the past. Yeah. So it'd be really interesting that maybe they're just thinking we've got to rip up the rule book and make a new set of rules. So that would seem to be what S&P are thinking.
Yeah, maybe. I mean, what you need to know if you're a retail investor and you want to go for it. So the IPO opened yesterday. It runs until 7 p.m. next Wednesday, the 10th of June, but it might close earlier if applications are more than the allocation of the stock. Official pricing is going to be Thursday, the 11th of June, and the first day of trading will be Friday, the 12th of June. The ticker is going to be SPCX. We know what the price is because the company said it wants to price at $135. You can buy it if you're a UK investor, but if you're buying it in an ISA, a lifetime ISA, or a dealing account, you have to fill in what's called a W8BEN form, which allows you to own US stocks. Okay, if you're buying,
it's really straightforward, isn't it? It's all to do with basically getting dividends from US shares, and ultimately that won't be relevant because SpaceX is not going to be paying dividends anytime soon.
No, but you do need to do it unless you are buying it in a SIP, and then you don't need to fill in the form. It's also worth noting some platforms are putting restrictions on dealing. Now, a friend of mine sent me something that Fidelity had sent, which is saying that if you flip your shares in the first 15 calendar days of trading, so before the 27th of June, you will be blocked from buying other new issues on the platform for several months. Okay, so do read the terms and conditions.
Yeah. I mean,
it's not just about the buying,
to be honest,
about the selling.
I don't know realistically that there's that many options, if any options, for UK retail investors to actually get in on the IPO itself. There has been talk about Robinhood Markets might have an allocation, but I mean, it seems to have been a bit opaque about whether that's true or not. So ultimately, you're really looking at secondary market. And what's unusual about the 135 price is, I mean, normally a company will go to market and say, well, this is the kind of range we're expecting. It might be, say, 140, it might be, say, 120, something in that range. But they come out with a hard and fast figure. This is what we want to raise the
Mm.
money at. So again, it will be a test to see what the appetite is from the markets. But don't forget, this is going to be coming on a huge valuation. So it's not, it might have lots of growth opportunity, but it's going to be how much you're willing to pay for that growth. So,
Yeah,
I'll be happily watching from the sidelines for the first 6 months, I think.
yeah, absolutely. Now, and if we are lucky, we might be speaking to a senior, you and I, Steve, might be talking to a senior US analyst on this stock on Monday. So if that happens, we'll get that podcast up ASAP.
Yeah,
Um,
absolutely. I mean, it'd be fascinating to get, a kind of a professional eye view into this. I mean, most fund managers that are interested, they're not about to tell the likes of us and retail investors, what they're planning to do.
no,
So it's going to be all after the market. But I just think it's worth going to read stuff we've written on our website about the IPO, and just to give you a heads up about the kind of risk you're taking as well as
mm,
the opportunity. So you need to always balance those two things. Opportunities can be grand. Great companies don't always mean great share prices. So,
yeah.
just take that on
Um,
board.
and meanwhile, a bit of a mixed week for tech, Steve. We had Broadcom and we had CrowdStrike, didn't we? And now here we've had Raspberry Pi.
Yeah, I mean, it's been as absolutely mixed. I mean, I think Broadcom and CrowdStrike, you can probably argue that that both companies have been affected by the same fundamental issue, is that they had such strong runs into results. I mean, CrowdStrike was up about 60% year to date. So they came off 10, 12% or so. And realistically, it wasn't about the growth opportunity. It's mainly about already high expectations weren't pushed higher still. So investors kind of took a little bit of money off the table. And that's not anything in my view to be worried about. It's really a case of taking a little bit of the kind of the pressure out of the balloon, and that's probably a good thing in the long term. Fundamentally, I think both companies look very strongly positioned for the long term, both in their individual markets, semiconductors and cyber security, and in the wider AI ecosphere as well. RPI, Raspberry Pi today, though, hit it out of the park again. I mean, I think you wrote about it last time, and it was just staggering. It keeps lurching up and lurching up and lurching up, but it does look like a really interestingly positioned company. FTSE 250 now, so over 2 billion quid's worth of
Is
company.
it really?
So yeah, again, you just have to think about valuation. Just chasing yesterday's news isn't always a sensible way forward. So make sure you just have a look at what is the growth opportunity and how much you've been asking to stump up. Go and have a
Yeah.
read. Again, there's a good analysis piece on our website if you want to know more about Raspberry Pi.
James, I'm sorry, we've been wibbling on about tech here. What's been going on in your world?
Yeah, let's talk a bit of cosmetics, Ian. Yeah, so I just see that the FCA
Let's.
finally ended its probe into potential market abuse at Revolution Beauty. This one's been an absolute dog of an issue since coming to market in 2021. Came at 160p after today's rally, less than 5p. So there's a bit of a
No.
turnaround underway here. The co-founders are back, but lots of headwinds. US tariffs, the beauty
Yeah.
market slowing in the States. Still got debt, so investors really need to do their homework before they even think about looking at this one. Another one that caught my eye was Remy Cointreau. A bit of spirits action for you, Ian. Um, Results weren't great, but slightly better than the market expected. And the new CEO, Franck Marely, launched a bold turnaround plan. Now, he reckons he can grow operating profits by 100 million euros in 3 years, which seems quite ambitious. But that spirits market read will be interesting with FeverTree reporting next week.
James, it's
Of
really
course it
interesting because
is.
a contract takes me right back to my childhood. It used to be one of those kind of you go in your mate's house for a party and there'd be a bottle of Cointreau in the drinks cabinet, and you try and replace what you drink with water. But there's been
Oh,
a brilliant advertising campaign recently. You may have seen it. This chap who looks a bit like Burt Reynolds in the 70s, walking along the beach and just looking like the bee's knees, and he's advertising Cointreau. A really good advertising campaign.
oh,
Yeah,
brilliant.
very, very retro.
Well, I'll bring you down a little bit with the UK construction PMI, which was a bit of a shocker. S&P Global put this out midweek. Worst reading and the biggest drop since the pandemic 6 years ago. Unfortunately, purchasing managers are facing falling workloads, so fewer contracts. They've got rising input costs and supplier delays. So they're feeling really gloomy. And dare I say, it's the house builders which have got the worst reading. So we've been cautious on them. The data, the sentiment in the industry is now coming through loud and clear as well. It's an avoid.
And who you've been looking at for next week? Who's exciting you?
Well, there's a few of mine actually, Steve. There's a couple of renewable trusts coming, but the big one's going to be Halma, FTSE 100, quality growth. It's had a good year. It's had a better year than the index, but today, for example, it's down 3-4%, just because it's a risk-off market, and I think people feel these things have had a really good run. I actually think it might beat. Well, I'm keeping my fingers crossed anyway. What about you?
Yeah, well, I mean, the big stories over in the US and in the tech space in particular, of course, Oracle and Adobe. And I've looked particularly at Oracle. I mean, I think the big question here is obviously part of this whole kind of AI infrastructure ecosystem. The big challenge for investors has been about its level of capex, and it's recently been tapping up huge amounts of money. February, I think it launched a $45 to $50 billion fund cash call. It's tapping bond markets, it's tapping equity investors. So there's a lot going on. They're really raising the stakes. They're very aggressive about the opportunity, but ultimately their cash flow is starting to weaken a little bit, and you just have to wonder whether or not they're overspending to meet this demand. We don't know. We might get more of a sniff come, I think it's after the market closes next Wednesday.
Right, gotcha. Well, folks, that's about us. I think we're out of time for today, and it's weekend coming up, but watch the skies for a special pod from Steve and I, maybe Monday, maybe Tuesday morning, depending on how quickly we can get it out on this SpaceX IPO.
And also, Ian, as well, you're doing another pod with a REIT, I believe, on Monday.
I am. It's going to be a busy day for pods on Monday, Steve.
Yeah,
we've
absolutely.
got Richard Shepherd-Cross from Custodian REIT coming on. Cannot wait
Brilliant.
for that. Richard
I mean,
is great value.
It's been out of favour for years, hasn't it? So it'd be interesting to see what his take on that is.
Discounts have been narrowing across that sector, and there's
Right,
been M&A. I think there'd be lots to talk about there. Okay, so with that, we'll wish you good weekend. Cheers.
Bye.
Cheerio.